So this week we have three messages. Firstly, in terms of asset allocation, what we've been doing in the portfolios. Secondly, in terms of earnings seasons, corporate results. And thirdly, central banks with a bit of a focus on Japan. Message one, asset allocation. So this week we've taken steps to reduce our equity weightings across all portfolios. To give you an idea how that works, for a typical balanced portfolio centered around 50% equities, instead of being very positive up at 60%, we're now at circa 55%. So the overall message is still positive on equities, but in terms of portfolio management, just reducing the risk somewhat. So the sun was shining relatively after a very tough start to the year, and while the sun was shining and markets were riding high, we took some profits. However, the message to clients is that we're still positive on equities overall. We just want to have a slightly lower risk profile going into the summer season. So the second message today is about corporate earnings. We're right in the middle of earnings season here, both in the United States and Europe. The good news is that generally they're better than expected, or admittedly relative to depressed expectations. We have seen some negative surprises in the tech sector. We've seen a real split, quite an interesting split. We've seen the likes of Apple and Google, now called Alphabet, disappoint, whereas we've seen the likes of Facebook and Amazon really surprise quite big time on the upside. In terms of what it means for our clients is that we do have some exposure to tech overall, including we have on a look-through basis exposure to Amazon. That's good news. And generally for the equity asset class, business as usual, companies are performing against depressed expectations. Message three, central banks. They're generally supportive for risk assets, equities, credit. So you've got the Federal Reserve Board in the United States being very cautious about raising rates, good news. You've got the ECB, amazingly buying directly corporate bonds now. One area of disappointment this week was the Bank of Japan. So the Bank of Japan refrained from some further action. However, we think they will come back and they will support the market via increased equity purchases. And in any case, we really like the favorable valuation in Japan.